Hi everybody, welcome to the Attract Capital webinar series. I'm Janine, here with Dave.
Hi everybody.
Today we're going to be talking about debt market happenings. So Dave, what exactly is happening in the debt markets?
Well, there's a lot of interesting things happening in the debt markets, Janine. It's really good if you're a big company. Like junk bond issuance is at an all-time high and rates are really low. So the bigger companies are raising lots of debt. Smaller companies, though, are challenged by the banking system, and they're not in a position to get their hands on as much funding as they need. So it's been really kind of hot and cold depending upon the size of the company that you are.
All right, and what would you say about the middle market?
So the middle market, the panacea that everybody saw was the Main Street Loan Program, which started a couple of months ago, but that's gotten off to a very slow start. And after the first 2 months of the program being active, there's only $1 billion out of a total of $600 billion that's allocated for the program. And there's about 120 deals that were done. The SBA is, people are looking to the Small Business Administration program, but they're backed up because they were so consumed with all the coronavirus relief that they were providing companies. So middle market companies are kind of in a bit of a quandary right now. The Main Street program is coming back. Mezzanine lenders are out there. Banks are starting to turn, though. We see a shift in the market, and there's a bit of a rebalancing going on in the banking community, and we can talk about that in a little bit.
That was my next question. How are the banks behaving?
Well, it's a very good question. And
behavior of the banks.
They're not behaving badly, but they're behaving slowly, and they're behaving overly conservatively. But what I see from the discussions, because we talk to at least a dozen banks a day, what I see is that a lot of them have a lot of loans to real estate projects, and so they have commercial real estate exposure. And because of the uncertainty about this whole work from home and the value of office buildings and the fact that there isn't going to be as much business travel, there's a bit of a reset mentality where banks are saying, well, maybe we don't want as much real estate loan exposure and we want more commercial and industrial loan exposure, which is actually a positive for middle market companies to the extent that banks want to make more loans to companies as opposed to make loans against real estate value. So I see that as a positive. I think the smaller banks are being more aggressive. The larger banks are being more conservative. And I think now we're getting back to a point where people are more interested in putting out loans than they were back in April or May, because most banks basically took 60 to 90 days off at the beginning of the pandemic.
Makes sense. So what would you say about debt funding in that situation?
So private debt funds have a lot of capital now, Janine. They're flush. They took a hiatus from doing deals for a while, but now they're back, and spreads have narrowed, and LTVs are back up to the levels that they were at back in late 19. So you can look at an LTV of 70 to 75%, and you can look at LIBOR plus 4, LIBOR plus 450 for a lot of these debt funds. They're ready to lend again at good prices and at good LTVs.
Great, that's positive.
I think it's very positive. I think the debt funds see opportunity because the banks pull back and the debt funds can get deals that they were competing with the banks for. So there's always an opportunity in a market where there's volatility.
Opportunity is good. That's a good thing. So then what about the future overall?
I think the future is bullish. I think as we get closer to the election, I think as unemployment continues to come down, I think as banks realize that there's a lot of runoff in their asset base and they have to start lending again, I think the fourth quarter is going to be a very strong market for middle market companies to raise capital, whether they're getting it from a bank, whether they're getting it from a debt fund. And I think this resetting or this rebalancing on behalf of banks going from real estate over to commercial industrial loans is a very powerful trend that could drive all the way from the fourth quarter into 2021. So I think I see the beginnings of a bullish market for middle market lending again in the not too distant future.
Okay, so balance, that's what we're looking for across the board. And there you have it, that's what's happening in the debt market, and we'll be back soon with more webinars. Thank you.
Bye-bye.